Hello and welcome to Bradstreet CPA's Video Tax Tip of the Week. My name is Lance Bradstreet and today is January 25th, 2012. In the blog today we're talking about a really interesting article where the IRS is actually auditing one of its deduction programs related to student loan interest. It's a really interesting article. I'm not going to go too in depth in it, but if you want to go and read it, it's at bradstreetcpas.com/blog. But today in the video, I really want to talk about how the presidential candidates for this year have begun to release their tax returns. And it seems like every election when this starts to happen, there's a lot in the news about tax brackets and effective tax rates. And I kind of wanted to discuss a little bit what that means. And you'll see over my shoulder at the moment, I wrote up on the whiteboard the tax brackets for 2011 and where they are. And they start at 10% and they go up to 35%, with 35% being the highest bracket for 2011's taxes. Now remember, we're in 2012, but we're starting to work on 2011's taxes. So that's what I mean by that. Often people forget, and I think tax brackets have become too much of a buzzword in our economy, meaning that everyone has an average tax rate or an effective tax rate. A lot of us really brush up against each of the tax brackets. And what I mean by that is a certain percentage of your income, for example, if you're a single tax filer, $0 to $8,500 of your taxable income is taxed at a 10% tax rate. And then the $8,500 to $34,000 is taxed at the next tax bracket, and so on and so on. So it's really, you hear a lot about the progressive tax system in the United States, and that's what they mean by that. As your income goes up, so does the part of the income that's taxed at each different bracket. So if you're in a 35% tax bracket, not all of your income is taxed at 35%. Usually if you're in a 35% tax bracket, a significant amount of your income is taxed at 35%, but certainly not all of it. And when we talk about effective tax rates, and that's really been what has been in the news lately, what is your effective tax rate? It's essentially an average. What's your average of all the income you've earned across all the brackets? Now, I hope that makes sense, and we've talked about this in our blog before, so you might want to go there and check it out. It talks about a little more in depth, and I think it talks about 2010's tax brackets, but they really haven't changed. They usually adjust the amount that's in each bracket by inflation, but usually it's a pretty minimal amount. Now, when we talk about effective tax rates, one thing you have to factor in is how different types of income are taxed. Now, we're talking about, usually when we're talking about these effective tax rates, we're talking about W-2 income or income as a self-employed person. What's not often factored in there is investment income. Investment income is taxed very differently. If it's an investment that's held for more than a year, it's taxed at 15% in 2011. And that goes into 2012 as well, and then from there it may change. And 15% historically is a lower investment income tax. Now, if it's an investment that's held for less than a year, it's taxed at your ordinary income tax rates, and all of a sudden we start talking again about the tax brackets, the average tax rate, the effective tax rate, whatever you want to call it. So I hope this makes sense. It's kind of dumbing down a complicated topic, but if you want to learn more, always visit our blog, always visit our website, bradstreetcpas.com/blog, or if you should have any follow-up questions that you don't want to address in a public forum, feel free to email me anytime. It's lanceb@bradstreetcpas.com. Thanks. Have a great one. Bye.